All right, how's it going, everybody? I haven't done a live stream in a while. Uh, been really busy, and I took a little break on trading. I've been trading, but not as aggressively as I've been doing, or how I usually trade. Only because, well, first being is I'm a short seller. That's one. I rarely ever buy long. But we're coming a time in the market where pretty sure you guys have been able to see what's going on with the market. So we've been rallying nonstop for I think the past 5 weeks. And this rally to me is just unusual. I'm more of a fundamental trader as well. I do technicals, but I look at the fundamental aspects of a lot of equities. And I was expecting a rally, but not this type of rally. So what I've come to a conclusion is that the market runs on a manipulation. Okay, as many people know this. So the market, I feel, is manipulated, right? And we all know that. So for me to start buying stocks long at that all-time market high, where the Dow just turned positive, the SPY has filled a lot of gaps up, and it's sitting at 2032, I believe. So we are up tremendously from our lows. And if you look at foreign markets, such as the Asian markets, they are up as well. Crude oil is up around $15, $16 from its lows. So the last 2 weeks I took a break. I haven't been trading that much. I only trade opportunities. So I traded VRX. I traded long crude oil contracts. So I trade futures as well. I swung DWTI, shorted RJET before it went RJET-Q. So I've took a little a breather for the market, and sometimes that's good. Sometimes you don't want to overtrade. I felt like I was up substantially, so I ended up taking a loss on crude as I was shorting it, and it continued to go up. So that's when I kind of just sat down, stopped trading for about 2 weeks, so I can come back. I analyzed the whole market. I analyzed well over 75 different tickers. So I have a huge watch list right now on my platform. Sometimes it's good. So I'm coming back in the market. I'm coming back clean, well rested. So this week I'm planning on making this a very good week. So I am pretty much going to share with you guys live, as I used to always do. I share my watch list publicly and my charts publicly, and I pretty much chart out live in front of you guys, just as if I was to chart by myself without any onlookers, right? So there was some questions that were asked on my Instagram. I'm gonna be doing a blab, so if you guys that are tuning in and like to tune in, if you guys want to tune in, you can tune into my blab. I'm gonna set up my blab, and you guys could actually talk to me one-on-one, and I can answer all of you guys' questions. So let me just look at some of the questions that were asked before I continue to do what I usually do. All right, as far as options go, I have a whole option video. So for the guy that asked about the options, you can check my option video. And I have a clear-cut option video to answer some basic questions. But I'll go over options as well. Somebody mentioned Netflix, so I'll be going over Netflix as well. Netflix is on my watch list, and I do feel like Netflix is a good potential short long term, especially if the market gives out or the market does a pullback. We all know Netflix trends with the market as well. So we saw a lot of blue chips are up, right? And they're not up because they're doing good or they had good earnings or anything like that. They're up because the market is up. So people are like, oh, all right, yeah, let's buy, and they feel good about themselves because they're buying. And they think that their technical analysis or their fundamental analysis of a company is great, but it's not. I mean, what do you expect? 90% of blue chip stocks are up because the market is up. So it doesn't mean that you're a good trader or your analysis is intact. No, it just means that the market is up. So when the market is up, blue chips are going to go up. So what else to do but buy stocks, right? And I'm a short seller, so that's why, as a short seller, as a bearish trader, you have to understand there comes times where you have to sit down. It's not an everyday market, right? It's not every day that we shine. It's not every day that we make money, right? So the past 5 weeks, you know, has been a little unusual, and I've noticed that. So I sat down. I traded very little bit. I haven't traded as much shares as I usually trade. I usually go on with a big lot, and I'm mostly a crude oil trader as well. So I just decided to sit down, and that's what a good trader does. And you're going to develop discipline, and you need discipline, especially in this market. So if you want to be a trader and a good trader, you're going to need to learn discipline. And it takes a lot, but you have to understand and wait for your time. And I believe the market is at a height where we're going to do a pullback. Whether we're going to, I'm not saying we're not going to continue to rally. I'm not going to say that we're going to crash just yet. I mean, I do believe the market is going to do a substantial pullback this year. I truly believe 2016 we're going to make a new low in the market without a doubt, right? But I do know that if we take a leg up on the market, we're going to have to do a pullback, right? So buyers, day traders, and swing traders that are going to continue to buy at these highs are going to get killed, just like they got killed a couple months ago. And it's like people already forgot just a couple months ago where the market was at. So from a couple months ago, I don't think the fundamental part has changed. I don't think anything, the foreign markets, Asian markets, China, Japan, I don't think much changed in these markets to say, okay, we're going to continue our rally. So, and I don't think people really realize, you have to look at the upcoming SEC filings for funds and institutions. We're at a time where, okay, so when the SPY hit at around 18 and change, and the Dow hit 15 and change, funds were stuck. Okay, institutional investors were stuck, right? Now, being the market that is all-time high, we're back at the highs, and I think they realize that this is a time to start dumping, right? And I don't have the proof to show you guys right now. I have to wait for the SEC filings. I have to wait. I think in another month or two, they're due, and you're going to see. Okay, it's very simple. You go to NASDAQ.com, you click your favorite ticker. You can look at Apple, Facebook. I know Facebook. If you look at Facebook institutional selling, when Facebook was, and you can check my other videos, I had Facebook, I was shorting Facebook at 114, 117, 115. It pulled back all the way to $98. And in my video, before it even happened, I said that Mark Zuck and his chief financial officer and all of the other officers are going to start dumping this stock. The stock was at a 52-week high. It was at an all-time high. They're going to dump the stock. And there was millions and millions and millions and millions of shares in Facebook dumped, right? The company's doing so good. Why are they dumping their stock, right? I'm not saying the company might be solid, but I think they realize that this is not a time to hold on to stocks. So they let go of their shares. And this is a time where funds are going to dump. So while the market is at all-time high, I don't think people realize that institutional buyers and hedge funds and everything, all of those people up in the higher channel are dumping the stock. So while you're buying, they're dumping. You're not going to see the effect, right? I don't think, if you guys watch the show Billions, right? Remember what Axelrod said? He said, dump my positions, but don't make it noticeable, right? So you're not gonna see a big hedge fund or a large fund or a large institution dump their shares, and you're not gonna see that. No, they're dumping in big blocks, right? And they're dumping their shares, and some of them might be even shorting these blue chip equities. So my thoughts of the overall market is we're way up, we're overbought. We haven't been this overbought, and this is a fact. We haven't been this overbought since 2009. And before a crash happens, this is what happens. It gets overbought, right? And I don't understand where this, how and why all of these investors are comfortable buying at the highs. I never buy at the highs. I'll short at the highs, but I'm not buying at the highs. So there's nobody out there that can convince me that the market is going to continue to ramp up or convince me to continue buying stocks. When I look at CNBC or Market Watch or investing.com and they tell you guys, oh, the market is perfectly fine, we're back to normal, great opportunity to buy. That is the dumbest thing I've ever heard, right? So if you're buying and holding, okay, or you swing investors, swing traders, if you're still nibbling at these stocks at their highs, you're crazy. You're absolutely crazy, especially if you don't trade futures. If you trade futures, okay, you can buy equity and hedge your long positions by being able to trade futures. So when the market is closed, obviously you can't sell your stock, but you can trade futures. So you can trade the SP Mini, you can trade the Nasdaq, you can trade, the Asian market. But you're buying at the highs, and that's just not how trading works. If you look at the RSI and a lot of these tickers, they're overbought. Their RSI, their stochastic RSI. And stochastic RSI is one of my favorite indicators. I put it before the MACD. The stochastics on a lot of these equities is saying to short. It's telling me to short. It's telling me that there's going to be a pullback. So I've reviewed thousands of tickers, and especially ETFs. This is a whole list of ETFs. I created a master ETF list, right? So I'm preparing for this pullback because I was a little bit disappointed with myself. I made solid trades on the last market pullback when the Dow was tanking, and it was perfect for me. I was shorting, but I'm a little bit disappointed in myself because I didn't really take full advantage of it when it dropped, right? And what I mean by that is I was trading, let's say I was shorting Netflix, I was shorting Apple, I was shorting Facebook, I was shorting Under Armour, I was shorting Lululemon, I was shorting, blue chips, right? And I was buying puts, and I sold a couple of calls during that. I made decent PLs. But what I realized is that I was looking at some ETFs, and there's a lot of ETFs that I could have traded, and I could have made 3 or 4 or 5 times the money I could have made during that drop, because there's a lot of ETFs that I was not aware of that actually trade. So for example, I would have shorted, let's say the treasury yields, 30-year treasury yields, right? I would have made it, they have a 3x ETF on that. So instead of actually trading the physical, well, actually, let me backtrack. Okay, how I'm going to play the next market drop, okay, is not by shorting equities. Okay, you can short equities, you can make your little 5% day trade. That's still a lot of money, but some ETFs that I got here would give me a better return. For example, if I would have shorted Brazil during the market drop, I would have made around 40%, 45% on the swing, just off shorting Brazil. If I would have shorted a lot of different stuff. So, and I will make my master list ETFs that you guys should check out. I'll make that public, and you guys could shoot me your email in the comments below, and I'll send you the master ETF list that I've developed as of yesterday. I reviewed them, I charted them, I looked at what they track, and everything else. So basically what I'm going to do is I'm going to start screen sharing now, my list, right? And what I use what I use to chart out is not my platform. I don't chart on my platform. What I do is I usually chart on. Let me just block this camera out. All right, so what I use is investing.com. And I love investing.com because it's a very clean chart layout. So you guys can actually make sure you guys are writing this out. Because what I do is here is I'm going to, and by the way, AEP, I am definitely going for a long. Not first thing, but tomorrow I'm definitely buying AEPI. Okay, the ticker is AEPI. I am buying that. It is oversold. It is massively oversold. Okay, it's a solid company. Let me see. All right, so you guys can pull up your notepad or whatever, pen, pad, paper, whatever it is, and you guys have to write down my entries. Most of these are going to be either short entry. Some of them are going to be long entry, right? But like I said before, market is back at its high, so I'm looking for opportunity to play some shorts. And tomorrow, I'm not sure if I'll do some trading in the morning. I'm going to just transfer this chart from investing.com. I'm going to transfer my charts into my TD platform and then wait for the candles to break either trend lines. And I'll explain to you what I mean by that. All right, so let me just pull up my my pad. Right. All right. So what we're going to do is short entry target. API. SeaWorld, I'm looking for a short as well. See, the thing is I like to place at least 15 different tickers. Doesn't necessarily mean that I'm going to trade all 15 tickers, but what usually happens is at least 5 or 6 of these tickers of my weekly watch list, my entry that I want gets triggered. So usually, you're going by you're giving yourself higher odds of one of your price entries to get hit. So that's why I usually do this. I am pretty excited for the week because I do think this week will be a lucrative week. What's GameStop? Also, ANF is on a high watch, right? ANF, it is time to short ANF this week. For those that don't know, is it is Abercrombie and Fitch, and I've been waiting for about 2 months to short Abercrombie and Fitch, and I'm very pleased with myself because it was very tempting, but I knew the time wasn't right, and I'll start off with it. Um, it's been on an uptrend, and I honestly wanted to short this at around $28, and I knew it wasn't time to short it, right? And we hit 32. We hit an all-time high, I believe, on this stock. Fundamental side of Abercrombie and Fitch. I'm sorry, the fundamental side, yes, of Abercrombie and Fitch is telling me that this rally won't last, right? It is probably outperforming all of the other tickers in its class. And I say outperforming in a sense of time period. So let's say from, April till now, it has outperformed almost any other company in its sector. So my strategy is very simple, right? I use a 29 and 50-day moving average. For my indicators, I use stochastic, set to 33 14 14. I'm sorry, 14 14 33. And I set my MACD up to regular default. I use the stochastics before I use the MACD. I don't use the regular relative strength indicator. I don't use the RSI. My RSI comes from the stochastic side. It's a high pace, right? So, and I base my entries off those indicators in my trend line. Now, I tend to draw my trend line a little bit different than some people. Being accurate with your trend line is very important. Okay, it is very important because if your trend line is not accurate, your entry is not accurate, right? As far as time frames, I always look at the daily first, right? And so if we were to look at the daily here, hold on. So if we were to look at the daily here, this is exactly what I would do first. I would draw my trend line here. Let me just, okay, and this is a clear-cut triple top here. If I was even watching Abercrombie at this time, I would have loved to place a short on this. This is an easy short here, triple top right here, if you guys see that. And what I do is now see, I would have first drew my trend line here, right? So let's say let's say in October 28th, you see the date at the bottom, 2013, my trend line would have looked something like this, right? And then what happens is when the candle broke out here, this was, and it's not a coincidence. Just I want, because I need you guys to really understand the exact way I trade, and I it's all transparent. If let's say this day right here, my trend line wouldn't have been no different than this, right? Because all I do is I make sure the trend line is connected here, and then it just extends out straight down, right? So here, being that the price action on the daily broke my trend line on the upside, we could have purchased this stock at 40 and we would have sold at around 43, maybe possibly, yeah, around 43, which would have netted 5-7% on the trade on a swing. Okay, so from the trend line break here, it just continued to trend up, right? And then it hit here. See, it's not a coincidence, right? You see how it perfectly bounces off this trend line, and then it goes right back down. Now, over here in October 3rd, 2014, it broke my trend line on the downside, and it continued to go down, right? So we would have short around 34, and it made a low of 16. So if we would have extended this trend line, right, it was a perfect short. Now, being that we are present day today, my trend line here would go I would place my trend line around here, right? So let me erase these. So on the daily, it's still, it has broken the uptrend still, right? So hold on. Somebody's saying, I hope you guys can hear me. Somebody just messaged me saying that they can't hear me. All right, so now if the daily, if we're still above my trend line here, you say, why am I looking for a short? Well, I'll explain why. So now what I would do is I would draw an uptrend, right, line. And what I usually do is I look at the nearest bottom here. And what I would do is I would go like this, right? And I would extend it. And I would leave this, I would leave these two trend lines until something happens. Now, what is going to happen, right? So obviously it's channeling up, but in all actuality, it's still downtrending. Now what I'm going to do is I'm going to look at my 30-minute chart. Let me remove these moving averages. Well, before I remove the moving averages, I want you guys to know that we're still above all of my moving averages. So obviously, like I said, it doesn't necessarily mean it's a short right now, but we're nearing a short. Okay. So let me remove the moving averages so you guys can see the candlesticks a little clearer. So from bottom to the nearest bottom, right, when it bounced back, this is going to be my new trend line. This is the trend line that I'm going to be focusing on, right? And this is going to be, since this is the all-time high, so this line extends all the way to, February, probably in the next 2 weeks. So you're never going to get your entry right away, but this prepares me for my entry. And every night I'll go back and obviously I transfer this into my TD platform, but every night I check all of my tickers, the charts, and see if the price has reached my initial price entry target for a short. Okay. Now, this is why I like to go a little closer. What am I on the 30-minute? On the 30-minute, you see there's a gap here, small little gap. And so I wouldn't, so it bounced here, right? So I wouldn't short it just yet. But you see from the highs, it is making lower highs, right? Because this is the all-time high. This is the second high. This is the third high. And this is the first low. This is the second low. and this is the third low. So if we make a new low, then obviously we're going to make a new channel down. I'm live streaming.
Did you get me?
In the fridge. All right, so I'm looking for this gap fill right here. I'm gonna point it down. This is gonna get filled tomorrow. I would say 90% that would get filled. So this is where I throw my indicator in, right? So I'm gonna throw in my RSI. And you see the RSI is all the way. So, so you guys are probably wondering how I use my RSI. Well, it's very simple. Okay, when the RSI is at these levels right here, telling you it's overbought and there's going to be some downside. Okay, so I wouldn't buy stock when the stochastic RSI is here. Okay, when it's over here, when it's at the top, you don't want to buy it when it's here. So let's compare it here to the chart. So when this was all the way at the bottom, the stock was at 30. When this is here, all the way at the top, the stock is at 31. So if you would have listened to the stochastic RSI on a 14.1433, you would have purchased. The RSI told you to purchase ANF here, and it was trading at around $30.69. You would have got around the point on the trade, and this would have been all. It would have been a day trade. It would have been a day swing on this, right? So we're looking for a gap fill here, and once this gap is filled, if it is filled, I will be taking another stab at it, and hopefully continue to short. So my price entry for ANF to short is at around. Sorry, hold on. I lost. If we take this trade tomorrow at the gap fill close, my stop is going to be at around 32.30. right, now we're gonna look at GameStop. So pretty much, hope you guys wrote that down. So I'm looking to enter short A&F at 31.75. I'm gonna keep my stop loss set at 32.30. There is no long. I'm not gonna take a long. This is GameStop. So I'm gonna start off on the daily, right? You see, I already did work here. Still on a downtrend, but if you look here, we what I noticed was, I was charting this earlier. There was a double top here. There's a double top. I understand some people tell me about the gap. There's a gap to fill at around 39.44. The conditions that GameStop is going through right now, I don't think that that gap is going to fill necessarily within the next week, right? So this is a MACD. The MACD is showing that there's downside to come in the future. So basically, if you look at the MACD here, it was at a high, and GameStop was around 32, continued to downtrend. It's at 30. So if you're looking for a long-term swing, and if you wanted to take a short, you can place a short here, but you're risking you're risking what, $2. So I would keep my my stop set a little tighter than that. So this is what I've come up with. I'm gonna redraw my lines first thing. Right, so this is the daily. Let me reset the chart. And what happened here is this is my moving averages. So I have the 9 and 20 on the daily, right? So here, if you were to pay attention to my moving averages, the candlesticks are under my 9 and 20 moving average, 29-day and 20-day moving average. And so long as the candles were under my moving averages, it was telling us to short and keep it a short. So all the way from 44 to 25, it remained under the 9-day and 20-day moving average. I do use a 50 and 200-day moving averages, but under different circumstances. So here you see it trended right back up, and the candlesticks were above my moving averages. But what happened here, and it just so happened to be that the candlesticks actually are now under my moving average. Okay, signifying that we can take a short swing on GameStop. Okay, ticker is GME. It doesn't necessarily mean I'm going to short it again as soon as the bell rings tomorrow at the open. It's just telling me that it's time, and now we have to pray on an entry. So I'm gonna throw my stochastic up here. My stochastic on a daily is where we're at a bottom. So my stochastic, right, is actually is conflicting with what my chart is telling me. So when that happens, I look at the hourly. I'll even look at the 5-minute. Look at the month. So the indicator is actually telling me that it is oversold and to go long. So all right, so the arrow there is signifying go along there. So I figured that I would go along there, hoping for a break above this candlestick here and create another uptrend. All right, that would be what my hope is. So actually, I would listen to the stochastic RSI, and I would say that I would like to go long, maybe around either that break there or look at when it hits around 28 and see what the RSI measure reads. Right. So keep that. Now AEP. Right. I wanted to go long on AEP. AEP RSI on the daily is saying that it's oversold, and I would like to take a long stab at a long on AEPI. And I'm actually going to jump in on this tomorrow with it's going to be a swing, so I'm looking to purchase around, I would say around 50 to 100 shares for my first lot, right? And then I obviously add price per share goes up. All right, I don't know how long I haven't been screen sharing, but somebody just notified me that the screen share wasn't working. So I went over Abercrombie. Abercrombie, I'm stating, if you look here, Abercrombie A&F, I'm going to short this around 31.75 and keep my stop loss set at 32.30. And I'm looking to cover this around $29, $28. Somebody mentioned GameStop. I'm not going to play GameStop. I don't like the chart, and I would actually go long above 32.22. Now I'm going over AEPI. AEPI, I am definitely buying, as I mentioned again, because it's oversold, and in all actuality, This stock is at a major uptrend, right? If you look at that, let's look at the 3-year. So we kind of double topped over here. So for the weekly chart, each month we're making a higher high. So October of, what is this? October 2014. Then here we kind of double bottomed, and then back in July 2015, we came back down from 59 all the way down to 46, 44, and we kind of had this amazing uptrend here. Now we're at a downtrend. So now I'm going to look at the daily, connected dots. This is a key level here. This is at 55. So RSI stochastics is showing oversold. I would look at my MACD. MACD is showing crossover soon, a bullish crossover soon. So what we have here is it's kind of like channeling down, right? For since the 9th of March, this is the 25th, and every week it goes up and then it comes right back down. It goes up, it comes right back down, comes up, bam, bam, it playing. So there's going to be a move made. So I would actually, what I would do is I would take a long at this. Look at the 5-minute chart here. Yeah, it's really a liquid, but not liquid, but there's not much volume in this. Let's see. But I would like to go long. It's going to be my guess here. We're going to break above this. Right, Netflix. Netflix is a long-term short. Netflix is pretty much battling subscription issues and stuff like that. Subscribers at an all-time high. A lot of subscribers come from China, I believe. I don't know too much fundamental side of Netflix. But we kind of double topped here on Netflix. And I was screaming short at around this area when we double topped. Then I kind of stopped. I was playing option plays. I was playing option puts, shorting via puts. If I were to play Netflix, it would definitely be with options. You get more return for your buck. We're actually broke the uptrend here. So if you look at the uptrend, even if you draw it here, we're back down. So this is the first. So again, when I first started the video, I said I'd kind of draw my trend lines a little differently than your average technical trader. First one here was my first one here. The reason why I drew this was because of this candle here. Okay, so I drew it from the high, and basically I drew. I'll redo it. Actually, I'll redo them. So what I would do here is I would take my trend line and I would make sure I grab this candle, draw it against the candle, and just extend the line out. Okay, I'm gonna clean this up. I'm gonna explain to you that the technical is no coincidence. Okay, stocks work and traders all trade on technical. So I'm gonna draw my arrow. So even let's say on this day was February 4th, I would have told you guys that if it breaks this trend line here to purchase, right, and to buy and hold, okay, and it was at $89, $88, and now we hit a high of $100, okay, and we're at $98. A break in this line here would have been bullish. So now I'm going to draw a second trend line from the top. And the second trend line was going to be here. And that's because we double topped here on the candles. We went back down. And if it would have broke, it would have been a bullish break and it would have continued to go up. Now I'm going to draw my third line. My third line is going to go here, right? And a break on this trend line is going to signify short, most likely all the way back down to the 80s, okay, the mid 80s. So somebody had mentioned on Instagram, told me to look at Netflix, and here it is, Netflix. Yes, you're right. Netflix could pose as a long-term short here if you're looking for the long term and you don't care about a precise entry. I do care about a precise entry, so I would say Netflix is going to go down, but I wouldn't just short it now. And if you were to short it, okay, you would look at here, kind of double topped, right? Created a top here on March 3rd, and then we created another top on the 22nd, and it seems like it's having a hard time breaking that line. These two right here, 1 and 2. Right, and it continued to go back down. So I wouldn't. The RSI is high, the MACD is high, but the RSI is also showing some. It could go back up some more, but I doubt it. So I would take I would hop in on a Netflix short. I would honestly be comfortable at around $100 on the short, but $100 entry would signify that it possibly could break, it could triple top. So what I would do here is I would take a short swing at around $99 or 90. I would say actually you can open market if you're swinging this with not a substantial amount of shares. I would say it's safe to I would say it's safe to short Netflix right now. So short entry anywhere from 100 to $98. Stop loss set at break of this double top, which is at 102. I would go long. Okay, CONN cons. So 15 is playing a nice channel here. We're actually under the channel, right? Where if you look here, so let's actually look at the daily first. Okay. So what I did was draw the trend line from the top, extend it all the way down to here, and it keeps bouncing off the trend line here. Did a fake out over here for about $1, about $2 actually. Con is showing a low RSI. It's oversold. So I would actually take a long at around. See, it's bottoming out. It's at a bottom here. So it's at the bottom of the channel at 1582. So the red line here, I would keep my stop loss at around. I'll even extend it down some more. So I'm gonna go long on con. Con is looking like a nice long over here at this time. Okay, SeaWorld. Nice channel here. Okay. So we're at a triple top over here on SeaWorld. So basically, it hit bottom here, goes up, hit a bottom here, goes up, hit a bottom, goes up, bam, bam. So if you see, let me see if I can do bam, bam, bam. This is not really an ABC pattern. I'm just showing you guys. So it goes up here, goes back down, goes up here, goes back down. So you guys could see the pattern. You guys could visualize the pattern here. Goes back down, goes up. So I'm looking at around here. You can get a $2 swing, $3 swing on the short side over here if you short at around 20. Keep your stop loss set. At around 20, what is this? 2050. Okay, 2046. That's good enough. So I would short SeaWorld. I'll even place a stop loss at 21. This is a perfect channel over here. This has been a bottom. Zoom in. So you see, couldn't break that. Couldn't break it. And then we're at the high again. Okay. So obviously there's some type of resistance there. Price doesn't want to go past that. Above this red line, I would go long. So above 2050 on SeaWorld, I would go long. Price target around $22. So short at around 20. Keep your stop loss set at 21. And I would go long above this red line. Again, stochastic RSI is telling me that it is overbought. So I am 3M. I had spoken about this on in my group chat. We have an all-time high over here at around 170. It's at 164. Made a double bottom, which was a clear-cut signal, or a triple bottom actually, to purchase. We're double topping over here. So I would go and as you see, the stochastics here are showing possible upside a little bit, but long term, I would definitely go short on this. overbought. Okay, Lululemon. There's a wedge on Lulu. Okay, call this a wedge. I don't really like to play wedges, but Stochastic's telling me overbought. We're nearing our trend line, so I would like to take down Lulu. So I'm calling a short on Lulu here. I'm going to base my stop loss set based on this resistance at around 68. Might be too far off, but place a stop loss around 63. Here, so yeah, I would place a stop loss around 63. I would actually prefer to short Lulu at around 61.50, and see how it plays out. But I know Lulu will retest the 50s. Let's see how it plays out. But ultimately, how I would play this is a break above this line right here, this downtrend line. I would go long. A break below down this line here is a clear cut short. Okay. Last ticker is UA. Right. You have a nice channel here, and basically short if the price hits around $85, or short if it breaks below 78. I'll tell you how I came up with this. All right, so or wait until the stock RSI goes down around here, okay, to go long, or short when it goes up all the way over here. So basically, for let's say since February 16 till now, it's playing a nice channel from 79 to 86. Okay, so a break below 79. So let me do that again. Let me clear that up. And going up, down, up, down, up. Major resistance over here, though. So obviously this is a long-term short, but if you look into short-term short, it's a long-term short, but short-term it's sideways. Okay, sideways is good if you're looking just for 5%, get in and get out. But I had this on my watch list. I'm not ready to place a short. My last short on this was from around 70 all the way down to 60. Um, I think it was around over here. Let me see. Yep, it was around here. Um, and no, it's not here. Right here. Okay, my last short was here. Earnings, we went all the way to 60s. Market tanked. This was around January. I took it for a nice 15 points. So now I'm just waiting until one of these break here. So 86 is a crucial mark. 79 is a crucial mark. Till then, I'm going to stay on the sidelines with it. So short at 85 or short if it breaks 79. No long entry in place. All right, so these are on my watch list. As far as oil goes, I was long here. So crude is at 39.84. If you guys are on my in my chat, I said I'm long 39.69. I was long 39.41 as of Friday. I sold my contracts at 39.81. I purchased back at 39.69, and I'm still long as of 39.69, and I am long. We're at 84. I'm looking for a nice 30 cents. I truly believe we'll hit 40s tomorrow. Not ready to place my long-term short on oil just yet. So actually, I switched sides and I'm a little long right now. Futures are looking green, so this would give us a perfect opportunity to short these tickers at their highs and go long AAPI tomorrow. Remember 63.64. Don't forget AAPI on your watch list. Don't forget to short Netflix at around $100. Don't forget to short ANF at around 31.75. And don't forget to go long on CONN at around 15.50. Those are my top ones. And that pretty much sums it all up for this week. Look at FinViz. See what happened on Friday. So PTLA has a failed phase 3 studies. I used to trade biotechs all the time last year. So I'm a little familiar with biotechs. Let's see. Let's see what's going on here. I just want to look at their financials real quick. It's very important to look at this. Look at their financials. When a company gives disappointing P3, P2, or P1 results, you want to immediately look at their financials, okay? Because what's going to happen is they're going to probably do another study, but if they don't have enough money in bank to do another study, they usually raise cash, and how they do that is by doing a raising, a price offering on their stocks, which would, you know, kind of destroy share price and bring it down even more. So as of December 31st, 2015, they have about 186 million in cash. Um, 186 million. That's enough money to last them. Let's see, their assets. Huh. They only have 75 million in debt, okay, in liability. Okay. So PTLA, so we're at a major support from July 2014. This is interesting. Okay, so financial part of PTLA, right? Sum it all up real quick. Obviously, I would look into detail, but just simple stuff. Cash, they have 186, almost 187 million, but that's as of 2015 last year. So I would wait to see what the report is. Let me see. For this year, let's see how much money they burned up this year. But you know, they were down to 57 million. Then they generated something happened here. So obviously they're selling a lot more of their products. They're at a, but their debt is just impressively. It went from $337. I'm sorry, $337 million in liabilities. They brought it all the way down to 29 here, which is fantastic. Then now they're trending back up. 75 against 186 million in cash and 502 in total liabilities is not bad. So if you look at the total liabilities, they're only at 75 million, but their total assets is 502. So they are nowhere near bankruptcy or anything like that. They have enough money to raise. To conduct more trials. So let's see what they actually do and what their so it's a phase 3 trial data, betrixaban that prevents blood clots. Right. So what I would do is see. I hate playing these type of plays, but sometimes they're just very lucrative. But from prior experience, especially last year, PTLA could face some downturn this week, but I would be looking for a long. But we're going to keep PTLA on our watch list. Just look at the chart real quick. I'll finish off with this. So for those that are curious as to why PTLA stopped here from tanking, I'll tell you exactly why. So you guys see the power of technical analysis. You see here, I'm going to draw arrows now. This is a very hard price to break. Okay. See, every time it touched this line here, we closed at this line on Thursday. But every time it touches this line, it breaks. It goes back up. Okay. So we're gonna look at the daily and gap downs. Stochastic RSI doesn't really mean anything. Okay. So let's look at the hourly here. So that's what truly matters. Okay, the hourly is looking stochastics is reading a buy. Okay. 5 minutes. So plain and simple, what we're gonna do is so we're gonna keep a tight stop on PTLA, $20, and long shares at 2050. So every time it hits 2050, I'm gonna attempt a long for a swing, and I'm gonna keep a tight stop loss at $20. Okay. Now let's look at the 3-year chart again. If it hits 1950, we're shorting. All right, so keep that. That's a major alert here that we're gonna watch. Remember, long price entry on PTLA is 2050. Steady stop loss set below 20, short below 1950, because that would mean that's a 3-year low. All right, and that's it, guys. Thank you for tuning in.